All right, guys, I'm back. Bill, just reading your last comment. Are you? Oh, Bill's already gone. I don't know if he's saying 9:30 on Friday. Oh, 9:30 on Friday mornings. Okay, I'm not sure. Usually 8:30 is the start time because it's Central Standard Time. I'm not sure if Bill is adjusting to his local time or what, but now he's not with us, so. Yeah, not sure about that one, Vicky. You'll have to get with Bill on that again. All right, so let's go ahead and walk through what happened with Spotlight, and then we'll be done for the session. So starting with the Russell E Mini, we already went through this enough where you guys know it got short and then stopped and reversed. Look at that perfect target floor, by the way. Anyway, that's power of quitting. 2 trades. Positive result. Moving your account forward, taking what the market wants to give you. Don't get caught up into the random distribution of trades that you haven't tested. That's the wrong thing to do. Crude oil, we already know, is horrible. Early in the morning. It was not good because anytime that happens, up, down, up, down, up, down, it's problematic. But let's walk through it. 9 o'clock start time. It gets long at 56.71 and it's going to stop and reverse. You make the 2-tick adjustment down to 60, right? Because the short's at 62, and then you push it to 5.9, the key level adjustment, and it does get short. So partial loss, short at 59. Now you have another stop and reverse to go long. And this time you're getting long, not at 66, but at 68. That pushes you right past that little spike. It does get long, and it comes all the way up and it hits its full target. But because of the 2-tick adjustment, you only made 11 ticks. So let's see. You're definitely still behind. I didn't do the math, but with 2 partial losses and an 11-tick winner, you're still behind. Then there's another trade, and it's this one, and this one is a full target winner, and in 4 trades, you get to your power of quitting, a positive result, and the trade plan wins. Even though it started off with 2 losses in a row, it finished with 2 winners in a row, and I guarantee you that this full target winner is more. Both these full target winners are going to add up more than the 2 partial losses that the stop and reverses produced. Just for the sake of following up on that idea that what if you don't stop and reverse at all and you just stay with the original trade, you would have stayed with this trade here. The stop is here around the key level, and look at how the price came up and bounced right off of the 80-cent level. Christine, this is good for you to see because I know this is a new concept. The key level adjustment would have kept this trade alive. It did not go through 80. The stop was pushed up to 81. The original stop is at these 3 dots at 79, but the calculator knows that. And it pushed the stop up. It made a 2-tick adjustment for us around the key level, and look at how that would have kept in the trade, because then it pushed all the way down and it would have hit target 2 for a full winner. And stop and reversing was not as good today as just staying with the original trade, but I will point out that either way, both produced a winning session. Even with the stop and reversals, the session wins and the account grows. Without the stop and reversal, the session wins and the account grows. The original trade was a long. Oh yeah. Well, then it would have been a loser. So then you would have had a loser, a full loser. It would have been a full loser instead of a partial loser. And then you would have had a winner and a winner. Still would have been positive. Full loser, 2 winners, right? Because you would have avoided this trade if you stayed with the original and didn't stop and reverse. So all 3 scenarios end up with a positive result, and that's my point. And that's why it's so important that you fast test, back test, come up with trade plan rules that you could follow and believe in. The strategy is forgiving, but it's so easy to forget that when you're taking heat and dealing with losses if you're just some person trying to trade. You got to be the CEO of a trade business that you've proven to yourself. And all three scenarios end up winning. But that still is a great example of key levels. So even though crude was crappy, it ended up being really good. Now we already saw on the crude oil report, by the way, the next trade's a winner too. On the crude oil report, we saw what happened, and we had a break-even trade. Let's go through it again really fast in case you missed it. Waiting the 2 minutes. Here you're 30 seconds in, you still have to wait, but we can get in sync, and it's 2 minutes in, it triggers in, stops out for 1 tick. You have a short, bounces off of the 75-cent level, no surprise there. Money management is 1 tick beyond. It stops and reverses and hits full target, and it's power of quitting, by a little bit only. Still positive result. Done. So both sessions today win on crude. So we have a winning Russell session, a winning crude oil session, 2 winning crude oil sessions, and no matter how you did crude oil, it worked regardless if you stopped and reversed or not. With the YM starting at 8:30, first trade, that's 9:10. So this unfortunately would have been a winning trade. Would have been a partial winner on it actually, but really close. But it's filtered out because of the squeeze zone filter. And sometimes it'll filter out a winning trade. So that's not a trade we're interested in. It's just a trade that we're not going to take. And so even though it would have been a winner, you're still waiting for your first trade. And it comes here. So you're getting short, 5.9, and there's that stop and reverse adjustment, right? So if the long is at 72, you adjust up to 74 and then push it through the key level to 76. It only gets as high as 73. And so then it pushes down and it hits target 2, and in 1 trade, you're done. And it even hits a perfect target 4. The calculator doesn't know we did the adjustments. We have to kind of look past the colors in this case. Just stay with the original trade, because the calculator doesn't know that we're using the 5% art that we reduced to our own mechanical rules. We don't need to tell the calculator to do all this stuff. It's just easier if we just do it as traders. We don't need to program every nuance in the code. Become a good trader. And a perfect target 4 and target 2 is our objective, but that's one and done. So far, all 3 charts that we've looked at, power of quitting, winners. Christine, I want you to see this. This is Spotlight Power Trader. Now let's look at the NQ. Remember, starting at 8:30 Central. Let's see what happens. So flat, 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 flat. There's the first trade of the day, 71.14. Now I'm not going to do key level adjustments on this one because this is the quarter point, right? Every point's a quarter, 0.25. I just don't find that the key level adjustments are necessary. So we're not going to do them on this chart. And it triggers in, and it doesn't quite go far enough, and that's a losing trade. So it loses 39 ticks. Then we have another losing trade. So 2 losers in a row. This is rough because it's just Spotlight's not trying to catch every move. Spotlight's trying to catch certain patterns, put the odds on our side for the trade plan itself. So that, 2 losers in a row and 3. So actually that's not a loser. That's a trade that cancels. Does it? Yeah, canceled because this bar closed right below the balance line. So it looks like it's a loser, but that's actually not a trade at all. It's just flat. It never triggers in. So that's just the system working for you. Keeps you out of what would have been a losing trade. It couldn't keep you out of all 3, but it definitely kept you out of one of them. And now you have a long trade here. Remember, when you're rallying down, reversal trades are probably going to fail because these are all entries that are putting you into reaction moves. Action, reaction, subsequent action. You want to trade the subsequent action. So if you're using Spotlight Master Suite, you could be taking trades off the blue line. That's why we show the blue line. So the trades you want to be in, and of course, after it failed to get higher, breaking resistance, you could assume a possible strong move down, and that's exactly what we get. It's just you need a different kind of setup to take advantage of it. And so your first reversals into the strong move down, the odds are very low because you're trading into reactions. Better to let the reaction trade up into our lines, the exhaustion dots show up, and then try to take advantage of the subsequent action move, like so. Or you could turn on that setup in Spotlight Master Suite, and some of you are doing that. And look at target 2, it would have hit perfect right there. Same thing here. Here, here, you got your exhaustion dots lining up on that blue line, marking the end of the reaction move and the subsequent action move. And that's the trade with the better odds. Until you get to your fourth reversal. This one's the third reversal. Still better odds than the first two. The fourth one's got the better odds. That one gets long. Is it a reaction, or is it maybe the beginning of a move in the opposite direction? Sometimes when you get to the end of the trend, what you think is a reaction is really an action move in the opposite direction. So before getting long at the first entry, you could wait for it to test the lows, and if it doesn't make new lows, it makes higher lows and then comes up, then maybe take the trade. That'll put the odds a little more in your favor. It's a little more confirmation. Doesn't mean it'll win. It'll just be more likely than if you were to just take it without the extra confirmation. And it does come up, it ends up losing. So it's kind of, trying to decide what to do here. So unfortunately, there's 3 losses in a row unless you're using the Master Suite setups, in which case you would have 1 loser. If you take that one or not, it could be a loser, or you avoid it, but then you get a couple winners off the blue lines to the downside. So, just depends on what you're doing here, because finally you get the fourth reversal. Like I said, the odds are better on the fourth reversal. That's the fourth one, and that's the one that goes up and hits a target 2 perfectly. Well, yeah. Well, or does it miss? Let's see. Target 2 is 7076.25, and it gets as high as 7076. So it misses by 1 tick. Pretty good trade. The fourth reversal. When you see a strong trend beginning, you might want to be wary of those initial reaction move reversals and wait. And if you see that fourth reversal set up, your odds are going to be much better. So it's funny, I just said that and then it happened. But we've seen it. There's no mystery. So this is going to end up being a losing session so far, right? Depending on what you did. You could have won, I guess. But the original trade plan, definitely a losing session. All right, so we've seen 3 winners, 1 loser. Now, Counterpunch won with the 610 tick, but it's a completely different chart. You probably want to look at the ES, something that we could look at since Christine is here and interested. So looking at 830, first trade comes right here, the short. And you could take profit at target 1 on the ES. You could scale out at different targets, but target 1's probably a good place to take some profit, especially when it's 5 points. 5 1/4. I'm sorry, that's the risk. Target 1 is 3 points. 3.75 points. 3 3/4 points. Target 1, and then it stops out here. So the first trade wins. And the second trade wins. And the third trade wins. And the fourth trade wins. The fifth trade, remember stop and reverse adjustment, wins. Short trade, you're going to adjust that entry a little bit below just to get off the line and below the swing level. That one loses. But by then you hopefully are finished. That's why we quit when we're ahead. But you can see that's spotlight working on the ES. Euro yen for the Forex traders in the house. Do we still have any Forex traders in the house? This one starts at 8:30. You got your setup right there. Long at 125. I would go to 96. Or not. It's up to you. But you don't go to target 1. You go to target 2, target 3, and target 4. You could scale out. Target 4, not bad. Pretty darn close to perfect. Because you don't want to accept any targets less than 10 pips. So that's one and done on the Euro Yen. And on the Pound Aussie, same thing, start at 8:30. First trade, 8:22, so you skip that one. Unless you decide to get in sync, which we talked about earlier, so that becomes your first trade here at 10:18. And that one, unfortunately, loses. So this looks like it should be a winning session, but if you're just sticking with the trade plan and you're not getting in sync, which we don't do, just basic trade plan, unfortunately, you miss out. You might make the argument to get in sync because as it comes down and fails to hit the stop and bounces off of the 50 moving average with all these bullish bars, remember what I showed you about the wick and the small bodies closing up, that's a clue that maybe you would want to get in sync in this case because there's a lot of reason to see that. Of course, you see it after the fact. Maybe during the fact, you're just like, ooh, chop, chop, chop. But if you were to get in sync, you could always set your entry a little bit above and then get in sync. That's certainly a valid technique. Because remember, this doesn't live in time. This is all based on price action. It's a range bar. So the next trade is a winner, but I still would think that you're probably working to get positive if you're trading this chart and didn't take the yellow trade. That trade loses 18 pips. You're going to be able to take 14 pips with a partial profit, then stop out, and now you're flat, but you can go till 12 noon. So the jury's still out on this one. But that's how that works. All right, so let me see if there's any questions. Hope you guys enjoyed the session. Christine, you got my email, right? Wasn't my first trade a long on one. I think you're thinking of Counterpunch, aren't you, Dirk? On the YM. The long trade doesn't trigger in. Oh, maybe it does. But the thing is, I'm adjusting that, right? The long's at 88. I mean, I guess, yeah, if that one's a loser, if you get in on that. But I'm always adjusting off my 50 moving average. So, you know, I'm either going to push that up to 89. I'm going to get it off the moving average. We know the moving average marks support and resistance. So I want to ask for a little extra. I could push it to 89. I could push it as high as 91. Well, notice the next bar hits 88 and then goes down. So while it looks like a loser, if you're using those little adjustments like we always do, then you stay flat. In the end, you have to have trade plans that you know your rules and you know what to do and you test and you just do it the same way each and every time. A 1 or 2 tick adjustment off of a moving average like the 50 is very appropriate. We've been doing it for years, and that's what we would do in this case here. And it didn't stab through it. That's why we make that adjustment. My eyes probably just instantly didn't even look at it because I probably saw that entry sitting on the 50 moving average and just looked past it, but should have double checked. All right, any other questions, anybody? All right, I'm going to sign off. Hope you guys enjoyed the session. Don't forget, John will be with you tomorrow. Everyone have a great day. Don't forget to go to our new blog, backpacktrader.com. And there's one category in there, places I've traded from. It's a new blog, so it's just taking shape. And you guys are all invited to post where you've traded from. If you want to put a photo or write something, whatever, I just think it'd be fun if as a community we all were sharing our own version of the backpack trader. Remember, it's symbolizing freedom. The backpack trader can grab his or her laptop, trade from the Siberian Express or from their own sofa or anywhere in between. The point is that we trade for our ultimate goal, giving ourselves the freedom to live the kind of lives we want to live. That's why we trade, and that's why we don't overtrade. That's why we stick with trade plans, quitting positive, taking what the market wants to give us, minimal and efficient trading, turn the computer off, go enjoy your day, and build your business with as minimal effort as possible. You got to put a lot of upfront pre-production effort in, right, Jim W? But once you've done that, once you got your trade plans and you're executing and you're growing, you're doing it, then it's time to just run your business and enjoy your life. Especially when you hit your critical mass, give yourself a 2 to 5 year trajectory. You want to plan all of that in advance so that you can achieve why you're trading, and that's what the backpack trader is. That's what symbolizes what that means. So I hope all of you all are able to achieve your own personal version of the backpack trader. That's what the blog's about. So I hope you guys get something out of it. But if you want to go on and post where you've traded from, it helps tell that story, and it helps reinforce your own efforts to become your own version of the backpack trader. All right, I know I said goodbye. I'll say goodbye again.